Welcome to the Energy Desk, a weekly series from Mobius Risk Group analyzing the macro and fundamental trends shaping global energy markets. To take a closer look at any topics discussed on today's episode, head over to our research archive at research.mobiusriskgroup.com. Let's dive in. Welcome back to the Energy Desk, and today, very excited to sit down and talk to Lisa Huff and Dan Morrison. We're going to be covering some Bitcoin, the relationship to AI data centers, and potentially some deeper insights on buyers of last resort and some of the opportunities for the energy sector in the Bitcoin space. How are you guys doing today?
Oh, great. Thanks, Alex.
Yeah, awesome. Well, one of the asides that I noticed, at least of your background, you actually got your degree in biology from SMU. I also got my degree in biology from SMU. So, I was curious. Yeah, small world. I was curious, how that maybe has played into your experience in the energy space, if you still use the biology side or...
I don't know. I'm so grateful that my dad said to me, you can either have a math or a science degree, or you can go pay for it yourself.
Yeah.
And at the time, it just seemed like horrible torture. But I actually graduated and immediately had a job, went to work for Fibro Energy, which was the commodities trading desk for Solomon Brothers. Mm-hmm. And then that led, through to a natural gas kind of trading career. And as strange as it sounds, that having literally a resume with all kinds of companies that are no longer in existence. And many companies where folks, including Enron, like somehow having Enron is like this gold-plated thing that's like, nice. On a resume.
It's well known. Yeah.
Just cracks me up.
Yeah, exactly.
But no, I had never used my biology degree, not one day, other than to say, I think when you have a math or a science degree, and especially if you're, a woman, and granted it was a lifetime ago, it gave you a sense of credibility, right? Mm-hmm. And I am analytical and, all the things required, I guess, to have a science degree. But
the science
didn't use it, wasn't interested in it.
Yeah, exactly. I think it's more the scientific method aspect of it. But anyway, that was just a curiosity. Before we kind of dig in, I think it'd be helpful to get kind of a quick background on both you and Dan, and maybe how you even got into the kind of current stage of what you're working on with the Bitcoin and energy kind of connection.
Yeah, maybe I'll just tie the bow on mine. So energy trading career, fantastically fun, made tons of money, very short work days when you were a trader, right? You had to get to the office super early, but then you were done. I think the market closed at 2:10 Central Time. So I was always out of there at a super reasonable time of day. And I really never thought that there would be a job as fun as, and maybe fun is not the right word. I'm a terrible Scrabble player. Maybe my vocabulary could be improved. But it like hit all the notes. Trading was like all the adrenaline notes, right? Mm-hmm. Because you had to be able to look at current market conditions and then assess your own assets. And my last role, I led East Coast trading for PG&E. We were based in Bethesda, Maryland. And I led the gas desk, which meant all physical and financial trading, plus, optimizing the assets that PG&E had. And I think at the time they had about 4,500 megawatts of power generation around the country. And so where that really, I think, aligns with Bitcoin is that, coming back into the workplace kind of 2017, 2018, and then beginning to look at new technology, and then figuring out this huge connection between energy, especially midstream assets, derivatives products that are not even here yet, but derivatives products that were birthed during the time that I was trading gas, looking at how they could be birthed in the Bitcoin side. Like all of a sudden I'm like, oh my gosh, this is, again, to use the word fun, like this is as much fun as the career trading. So There's a lot of similarities. I'm very surprised there aren't more energy people that are flooding into the Bitcoin space. Maybe what ends up happening at the end of the day is that the energy companies take over all of the Bitcoin mining. I really wouldn't be shocked, and that's what Dan and I are working on today.
Yeah. Yeah, well, I'm excited to get into that side of it because I think the proof of work and the energy intensiveness of Bitcoin is an important one, especially going over the next 5 years. Dan, maybe if you want to just give a quick breakdown and then we can dig in.
Sure. I started my career at Exxon a million years ago as a reservoir engineer, worked there for a number of years, worked for a couple of small independents, and then went into the Wall Street financial world for almost 20 years. For small firms, regional firms, my own firm, combination of sell-side, buy-side research, all in the upstream space. So I like to say I've sat in every seat in the room, from a pumper to CEO to board members to analyst. Mm-hmm. My last real gig was managing the remnants of a bankruptcy through a sale process. And in the wake of that, I was looking for something to do. This was in 21. And hash rates ripping. The Chinese ran all the miners out of the country. So I was trying to help some of these guys figure out how to do Bitcoin mining in the oil field. It became apparent to me pretty quickly that the oil field's the hard part. The mining's relatively easy. Nothing's ever easy, but of the two, it's a lot harder to go stand up or operate an oil company. Some assets came on the market in New Mexico that were a perfect fit for mining. Gas production, pipeline system. No one wants to buy it because gas at the time was depressed, not as depressed as today, but and it was kind of a tough operating environment. So I picked those up and built a vertically integrated mining business where we own everything from the reservoir through the Bitcoin. And over the last almost 2 years now, year and a half, we've been trying to take that experience and leverage it into a few other angles, not just on Bitcoin mining, but as we've alluded to here, it's kind of morphed into data center operation. And we can talk more about where we think large scale mining's headed. Yeah. It's intertwined with the data center business.
Yeah, absolutely. I think that's one that is increasingly popping up on the kind of newswire as the AI frenzy in 24 really kicked off. But maybe as a start, we can get a little breakdown of how the Bitcoin mining and Bitcoin industry really has transitioned. You mentioned a little bit there as the miners were kicked out of China. The timeline that both of you guys mentioned was, between 2017, 2019 into 2021. That kind of coincides with the institutional kind of uptake of Bitcoin. So I'm curious, how the mining side has changed, maybe gotten more industrialized in the last few years, and what that means for, say, the US for energy consumption, or just Bitcoin in general for energy consumption.
I'll take a swing. So we have really the last 3 years, and it's been very rapid, seen the rise of the industrial miner on grid US. They have access to public capital, kind of the only method to build to the scale that they've built as fast as they've built. So there's that. Bitcoin mining is in the aggregate still a fairly small part of the power consumption. The looming giant coming over the horizon is HPC AI. Not coming, it's here, but the growth is meteoric over the next 5 years. Mm-hmm. And that really sets the stage for the next phase of US mining, which is, and you see it among the big industrial miners, they're already pivoting and starting to market their infrastructure to HPC AI guys. There's only one that's not really. So that just is going to push mining, we think, further upstream into the energy production business. Mm-hmm. And we're seeing kind of the green shoots of that right now with smaller private companies. We were in an office last week, small private distressed asset, and Bitcoin mining is really kind of the only way to salvage value out of it. And so a year ago, I thought last year when gas prices, which you guys know, were negative in the Waha market for most of the year, I thought that was going to drive adoption in the upstream. It took really that in a combination with this pullback in oil prices. And now all of a sudden, Bitcoin mining economics are competitive with what they're looking at for their normal investments. Mm-hmm. Historically, it's always been, we don't know how to do that. We make a lot more money drilling oil wells. We can go buy properties. Now, the upstream business is challenged with weak commodity prices, and all of a sudden, Bitcoin mining's looking pretty good. Yeah. So I think you'll see, at least starting in the smaller companies, a lot more adoption.
And kind of digging into that further, regionally in the US, is this kind of blend between Bitcoin and energy, or Bitcoin miners moving further upstream? Is that concentrated in a few areas? I know Texas is kind of this hot spot, a lot of ERCOT commentary about this, but as they kind of transition to that upstream side, is it, Waha, as you mentioned, or are there others that you're seeing kind of a concentration of miners?
Texas and North Dakota are kind of still the hot spots for the reasons that those suffer from bad pricing. And there's only really one miner in the large publics that's made a meaningful push into upstream mining, and that's pretty still nascent. They're still feeling their way, but we think they all kind of come that direction at some point. If they want to stay in the mining business.
Yeah. For listeners, maybe it'd be helpful to kind of expand on this value proposition for the miners to, say, somebody in the energy sector, why they would want to work together and be, say, the buyer of last resort.
I'll do a real quick nutshell. Once you invest the capital in mining equipment, and it's not insignificant, the effective price you realize per MCF, if you think about it that way as an easy comp, is, even using old generation equipment right now, upwards of $6 an MCF. If you use, next gen or current generation leading edge equipment, that goes to like $15 an MCF. So there's a real positive benefit, obviously, from realizing better netbacks for your production.
Yeah. And one of the questions for the AI industry is this latency issue that has historically made the data centers move closer to where they're going to be serving whatever information is required. That infrastructure and that latency is decreasing with things like Starlink that's opening up access to internet and things like that. But for miners, is that even a concern, or is there kind of endless? Yeah.
Miners have a very high tolerance for shitty internet connections. Pardon my French.
Yeah, that's interesting. So as the miners are potentially transitioning to offer their services to the data center side, how do you see that transition going? What's that timeline maybe look like, and what are the challenges?
It's underway right now. The timeline's now. Riot's offering capacity, Cypher's offering capacity, Iron's offering capacity. They're all offering capacity to HPC. Challenges, I think, are just when there's a lot of competition amongst those parties, and then those are all trying to get into a very crowded grid situation, especially in Texas. They all want a gigawatt. It's like gigawatt's just kind of the starting block. Or really, the starting block's 250 megawatts, but that's the appetizer. So when you have all these giant loads trying to plug into the relatively constrained grid, it creates a lot of congestion, and it's pretty low visibility on what's going to make it all the way through.
Right. And that is kind of the big question that we see across a lot of these grid operators and folks like NERC when they're looking at their grid reliability assessments. One of those questions is how much load is there actually from Bitcoin mining? And that seems pretty opaque at the moment. And now there's another level of the large load that's going to be connecting to the grid or potentially going behind the meter. How is that competition going to really affect both the miners, the AI side, and how do you see that being resolved going forward?
I'll take a stab at that. The Goldman Sachs 2024 report on generation growth. So this is a year old. It came out in April of 24, but I refer to it all the time. I wish they'd update it, or someone would. Did not even include Bitcoin mining load in their generation report because it is so insignificant. Mm-hmm. And so just for your audience, what we're talking about is, in the last decade, we've had 0% load growth.
Yeah.
The estimate for the U.S. electricity demand through 2030, so 24 to 2030, is 1.7%. The demand for data center growth is 2.4% a year. And so their estimate basically says by 2030, data centers will be 8% of total US demand. Mm-hmm. So again, just like I'll repeat the sentence I said first, the mining wasn't even included because it's so small. And so just to like put numbers to it, again, if the AI data center guys, here's a scenario that we see. The AI data center guys are either huge companies with huge balance sheets, right? And they can pay whatever they want for power. Or perhaps it's a startup and they've raised money from Silicon Valley and they've raised at a huge valuation. They need to secure power. Again, they're not super price sensitive. And then you've got the Bitcoin miners going, well, if it's above X price, right? I mean, we can look at the Bitcoin price, see what the market is doing, and they are supremely price sensitive. So they're being priced out of all of the kind of traditional power sources. So once as Dan mentions, the Riot and the ciphers and those get bought up, or they're, once those are spoken for, once those dance cards are full, And then what do you do? I mean, to me, that's why the Bitcoin miners, it's disappointing to see Bitcoin miners move offshore to cheaper power. It's disappointing to see them go to Paraguay and be connected to a hydro, right? But disappointed only for the sense that I love seeing the infrastructure here in the United States, and it should stay here. It's basically the banking system of the future we're allowing to go offshore. So what Dan and I are working on are behind the meter opportunities for folks. Mm-hmm. So finding, chunks of infrastructure or other assets where perhaps, you could do, we look at Bitcoin mining projects, but we also look at some of the larger data center projects. And I guess that's why I said earlier, maybe every energy company just becomes a Bitcoin miner. It seems like it just needs to be a tool in their toolkit, right? Because let's say that you have assets, but, one of your markets where you can sell gas, like Dan mentioned, is the Waha market. And it was, I don't know, I'll guess 50% of last year, it was below zero. Right. That's not a great use of capital for an energy company. So,
we call that suboptimal.
Suboptimal. Exactly.
Yeah. The stain that has been left by Elizabeth Warren, who, don't let me forget to say, I think she belongs in jail for treason for the garbage that she has perpetrated against Bitcoin and the Bitcoin miners. I mean, the garbage that has been perpetrated by the climate activists. I mean, we're not talking about power only, right? Like Bitcoin is money for the whole world. We all will be transacting on it. I think in the next 10 years, I think it's way sooner, but let's just say 10 years, we're all transacting on Bitcoin. Every time you move a Bitcoin miner out of the United States, you're basically moving a bank branch that you're going to depend on out of the United States. And, Elizabeth Warren and her cronies and the banks, Jamie Dimon, saying all kinds of horrible things against Bitcoin have really just been to protect their own interests, have been to protect their own interests, right? It has not been about protecting the security of the United States. And Bitcoin, AI, all of these things are integral to the United States economy. Our economy has always been built on, innovation and new technology. It's no different than when oil was discovered. And then, here we are today, oil is integrated into everything that we do. It's a ridiculous situation that Elizabeth Warren, I'll just say her name one more time for emphasis, I think she's evil, has gotten us into. And, it's when we go sit with energy companies like we did last week, this group that Dan mentioned, like everyone that turns on CNBC and has had this crime committed against their brain that Bitcoin is evil, it takes a lot of work to undo what people have heard, right? It really takes people going back to what are we actually trying to accomplish? Like, where do we see this going? what is best, right? What we're figuring out right now is that the internet has its own money, right? This is money for the internet, and it's money for every human on earth.
Yeah. I think, at the heart of what you're talking about with whether it's Bitcoin or the data centers for AI, at the heart of that, I think, is this takeaway that compute is kind of that next generation of commodity. I think that creates an interesting transition that we can get to for maybe inside the energy industry, who is adopting or the most willing to kind of go down the Bitcoin route. But before we do, I do want to cover some of the incentives with the industrialization of mining. I'm curious to get y'all's take on that. As the resourceness of the mining gets more and more competitive, that the mining technology or the infrastructure needs to be more performant. The cost to enter that market and capture market share has gone up, obviously. How does that, I guess, relate to Bitcoin's kind of value proposition of decentralization versus the incentive that maybe is more centralization as resources required to get into the market go up and up and up?
Well, that's true for like the leading edge guys. So if I'm going to plug into the grid and my average power cost is 6 cents, I have to have a certain level of efficiency in my hardware. If I'm mining with zero priced gas that I would otherwise have to shut in, my power cost is a lot lower. It's not zero, but it's sub 2 cents. So the interesting dynamic here is it's created this market for these lower last generation machines that can kind of go down the food chain, and the off-grid guys can actually kind of function as bottom feeders for that equipment. So I can buy the last generation stuff and deploy it economically, much less capital intensity. The economics are still good, and in some arguably better than the leading edge stuff, because my cost per terahash is not an order of magnitude, but 4 to 5x cheaper than the leading edge stuff. So it's kind of a more durable ecosystem that's developed in mining, where the big guys shuck their last generation equipment. There's now a market for it, and I think that just continues to expand.
What prevents the big guys from going to where the molecule is cheap?
So hold on. No, Dan, go back to give a real example of what you mean by your first machines that you bought. How much were they a piece?
And you're going to embarrass me. They were $8,000.
And the machines, right? The machines that I have, I don't even remember what I paid for them.
I think under around $400, and they were better than my $8,000 ones.
400.
Correct.
8,400.
Yeah.
So again, though, like one of the things that we looked at, Alex, was a project out in New Mexico where they would be shut in without some sort of a solution. And so perhaps you have another oil field solution that you can bring in. But that's what I'm saying. Like Bitcoin mining can be this tool in your toolkit, right? You can have, it's been so long since we've worked on that, Dan, the guys with the compression. You can have one tool, maybe, right? When I traded gas, I'll just say this. When I traded for PG&E, we had gas and coal plants, right? We looked at the two commodity prices, and that's what we traded against.
Right.
And that's how I think we need to begin to evaluate Bitcoin mining when we're an energy company. It's, what are we trading against? We need to set all of it's too energy intensive, Elizabeth Warren bullshit, etc. aside. Like, that's wrong. She's literally gotten in your way of making a smart economic decision. So for people that have excess power, whether it's you can't flare because if you're in New Mexico, they don't want you to flare anymore. Another project that we looked at recently, some guys had just turbines sitting on the north slope of Alaska, and they called and they were like, should we be mining Bitcoin? Like, this power is just sitting here. Like, what do we do with this? Like, we own it. You've made a capital decision, right? You've coordinated and you've deployed capital, and you bought some sort of infrastructure. And yet you're refusing to maximize it because of what some old woman on CNBC told you. Like, we've got to stop. It's lunacy.
Yeah, I think it's an interesting value proposition as well for the speed that infrastructure can actually be built. So for domestic natural gas, you kind of have this paradigm where the supply side has just gone through the shale revolution. Infrastructure for storage, transportation is still kind of limited in that pre-shale era. So the volatility risk from, say an oversupply of molecules with, too warm of a winter or too cool of a summer, that is kind of an interesting way to offset some of that risk. And so it sounds like the primary adopters in this space are natural gas. Has there been any other kind of signal that you guys have seen?
That's the main one. We've pitched some underutilized infrastructure opportunities, like Lisa.
Power storage, wind, or
wind and storage are kind of, that's in the grid world where those have already attracted all the mining guys, where you can, and that's again kind of another subset that's enhanced by this availability of cheap older mining equipment, right? If I can go out and my utilization is only 50% because I'm only going to run when the power is 0 or negative, then that's a whole different business model than, the normal on-grid mining model. So you're seeing all these Bitcoin mining really it seeks out the most disadvantaged power sources, on the planet. And they're literally on the planet. And that's just kind of what it's good at doing. It seeks that out. So it manifests in lots of different ways.
Yeah.
So let me just go back to your question, though, Alex. Your question was the Bitcoin miners, why are they not going to the molecule, right?
Why are the large ones not going to the molecule if there's an incentive to do so?
Right. And I think that we see that they are, right? But it's also very hard. It's even the most sophisticated miners that have loads of money. Again, it's when we go to pitch oil and gas companies, Dan always starts by saying, like, the energy side is the hard side, the Bitcoin mining side is the easy side. Mm-hmm. And really that's true. The folks that have tried to deploy on energy assets have met loads of challenges.
And what are some of those, if you have some top of mind examples?
That's why, I've given Dan the nickname. He's like the oracle of off-grid mining. His phone, He really is on his phone all day because people are trying to figure out something that they have.
Yeah, that's a good nickname to have, Dan.
That's debatable.
He just said, because I've made every mistake that there is. He always is very humble about it. But it's hard.
It's a relatively, young industry, and it's matured a lot, but there's still, every project's different. And, to your point, you're taking an on-grid mining guy who's got their normal business is setting up ASICs in a nice controlled environment inside of effectively a warehouse style data center. Mm-hmm. And the power's either on or it's too expensive. Their big challenge is, when do we shut in because power got too high? Mm-hmm. They're not having to maintain and service generating assets that are not in a very pretty location. Yeah. And that's just a different skill set, but it's one that feeds right into the oil and gas business. They run lots of engines all over the place, compressors, industrial pumps, that's what they do.
It's already happening, right?
Yeah. So it's very easy for them to transition into managing the mining rig, because the biggest component of the equipment, most complicated piece, is stuff that they really already know how to do.
Mm-hmm. So I'm just going to add on to that. So this meeting we were in on Friday, and I want to preface this by saying everything that follows here is admiration and respect for the energy teams. We're in this meeting, private oil and gas company. One of the guys asks at the very end of the meeting, what's the hardest part of setting this up? Like, what's the hardest part of doing one of these projects? What's the most challenging, I think maybe is what he said. And Dan answered the question and said, oh, the generation assets, right? The Caterpillar generator that's going to fail on a Friday night at midnight. And oh, by the way, the guy that services your cat generators, his mother-in-law is sick in a state that's 4 states away, right? Like that.
Mm-hmm.
And this team was like, okay, well, that's what we're really good at. Like, we know how to, we know engines.
Yeah, it's
like
part of the gig. Yeah.
Part of our business. And I said, with all due respect, I don't think that's the most challenging part. I think it's your ego, right? It's your ego to go try this thing that very few people have tried. Yes, loads of Bitcoin miners are doing it, but there are not loads of energy companies that are doing it, and they should. I mean, it's just a very simple tool in their toolbox that they can integrate.
Mm-hmm.
And I said it to them, again, with the most respect. I mean, if you're in the energy business, you are on the front line of our national security. We cannot operate anything without you. But you've got to get rid of the narrative that bings around in your head for all the reasons not to do it. And, I love referencing, there's a study that was done by a guy at MIT, Christian Catalini, and it basically was about ego and Bitcoin adoption and people that consider themselves early adopters, right? It's like, it was literally a study about how the smartest guys in the room are going to integrate Bitcoin. And his study found that the smartest guys in the room, if they aren't already doing it, right, they don't want to be considered late at anything. And this MIT study proves it. And I go into these teams and I just want to beg them, please, you really go forward and be wealthy and be an innovator. You're still, if I say nothing else, we're still early, right? Less than 2 or 3% of the world knows about Bitcoin. No one has integrated it at scale yet. I mean, yes. I mean, Russia is mining. They said they mined 1 out of every 5 Bitcoin in 2023, right? Yes, nation state energy assets are mining Bitcoin. Bitcoin miners are mining Bitcoin, but we need the energy guys to come in here and just pick up the tool like it's another something they can put in their toolbox.
Mm. What are the economics? Say, an energy producer says, okay, I want to bring this into West Texas. What are the economics like these days after, say, the halving, and maybe how does the halving affect those economics?
Yeah, so it's really improved with that low cost equipment we talked about earlier, right? You can get project returns in kind of the 20 to 30% rate of return without having to. This is the debate I have with Lisa when we talk to these producers. We're both obviously very optimistic about Bitcoin. It's very hard to come into a group that really doesn't understand Bitcoin and then show them a project that requires Bitcoin mooning for it to work, right?
Mm-hmm.
So we try to dial expectations back, but even with very conservative assumptions, you can yield 20 to 30% returns depending on your equipment and acquisition cost is the big driver. And that's attractive to these guys now. Like I mentioned earlier, that used to not compete with their drilling economics, but with oil in the 60s, gas, struggling to maintain 3 in the good markets, not to mention Permian, all of a sudden that's competitive and they have to lean in and, be willing to figure this out. It's also the size of the capital commitment they have to make. One of the beauties of mining is it's scalable up and down. Linear in a grid situation, in off-grid, where it kind of comes in elements based on your generating capacity, kind of chunks, but it's still linear up and down for the most part. So they can start small and grow into it, or it's a much more digestible investment just to get started.
Mm-hmm.
One of the groups that reached out to us, this was a year and a half ago probably, there was a gas well on the site of an elementary school.
Oh, yeah.
Texas. And the school obviously grew up around it, right? The well was super old, 40 years old or something. And they found us and they were like, should we be mining Bitcoin? And I mean, Dan spent, I don't know, less than an hour probably and had shopped a generator, had shopped the miners, and basically just said, like, here it is. Like, a lot of these solutions can just be off the shelf. We're not, this is not
rocket science.
Rocket science, but like you're not solving for cancer here. It's taking a generator, which if you're in the oil industry, it's my understanding you're pretty comfortable with, and plugging some computers in and turning it into magic internet money. And then sell it if you're not a Bitcoin zealot, like I happen to, or keep it if you think, maybe there's something to this, because less than 5% of the world has Bitcoin. Like, what if Bitcoin adoption happens?
It's my favorite adoption story, real quick. At NAPE 2 years ago, I get a call from a guy who'd looked me up in the regulatory filings to get my number. Super old school. And he's an older guy, private producer up in the Panhandle. He's getting just crushed by prices. And he wanted to bounce. He'd seen a podcast and he's wanted to ask me questions, make sure he wasn't missing anything. He ran through his list. So, yeah, you got that. So he'd covered all of his bases. It's not, for oil and gas guys, it's just not that hard. So I was entertaining some mining pool guys at my site who wanted to see off grid, and he came along. So we spent the day, it was hot as hell, August, kind of looking at generators, how I'm set up, and et cetera, et cetera. At the end, and he spent a lot of time talking with these mining pool guys who know nothing about off-grid operations, but they're literally one of the first mining pools. The guys are from Ocean, and they developed one of the first mining pools 10 years ago. So he's hearing their spiel, and at the end of the day, he's like, I'm probably never going to want to sell this Bitcoin, am I? It's like, no, probably not. So it's a guy, older generation, did his own research, deployed his own mining operation, small scale, and he's already figured out how to do it better, right? He's like, he bought this equipment, he can improve on that. And by the end of his fairly short journey into Bitcoin, he's already realizing he needs to be a hodler.
Yeah, because it's the whole sound money conversation. I mean, I was at Passover at a friend's family's house in Dallas a couple of years ago. This is probably 3 or 4 years ago. And the hostess, it was a woman and her husband. They're both in their 80s, almost 90. And she said, "What do you do?" And I said, "Oh, I hesitate to tell you." And she said, "What do you do?" And I said, "Well, I work in Bitcoin." And she goes, "Oh." And I said, "Oh, do you know anything about it?" And she said, "Oh, I know it's going to be the global reserve currency." This is an 80-plus-year-old.
She knows the line. Yeah.
She reads 3 papers a day. I mean, grew up in hard times, has seen hard times. Like, once you understand that all Bitcoin is the scarcest asset on earth, I mean, in my opinion, if you have access to energy assets or any capital, you should be buying Bitcoin or mining Bitcoin, right? I mean, my favorite kind of like, and this is what I did for the guys on Friday. These numbers are not exactly correct because the total scale has grown. I think total global assets today are $1,000 trillion. So commodities, equities, fine art, collectible cars, all that, right? Everything. But the numbers that I know by heart, it's when that number was 900 trillion. So 900 trillion in total global assets. Bitcoin is like this tiny, tiny percent. It's a $2 trillion asset. But what if the whole world, what if not the whole world, what if Wall Street just said, we want 5% allocation, right? The people that own those assets, what if 5% of those assets went to Bitcoin? That's 45 trillion. 45 trillion divided by 21 million Bitcoin, right? That's the total supply. That's $2.14 million of Bitcoin. So what I love about that example is that we're talking about, like, what if your mom and dad and my mom and dad and Dan's mom and dad, and we and our kids, right? The people that own those assets made a 5% allocation. But that's the thing about Bitcoin. The number is going to get so much bigger because think of all of the people, most of the people in the world are not part of the total global assets, right? Most people don't own equities, bonds, fine art, collectible cars, Daytona Rolexes. mean, we are this tiny fraction of people that own those assets.
Yeah.
So the number can get literally infinitely larger than the projections. And so when Dan says, Bitcoin's, maybe it grows, I forget what your number was, but it was so small that I said, you can't tell them that. They're going to think you're stupid if you say that number. He's like,
I have to explain it.
Yeah. One of the interesting pieces of this, I guess there's two. One, the argument that, a lot of, my friends in the Bitcoin space and others talk about is it's going to be a reserve currency. But then, there's also the argument that it's going to be something that people transact with on kind of a default basis. The transaction speed for Bitcoin is not great, and there has to be some of these other layers for it. I think those two seem to be a little bit mutually exclusive. It's kind of like talking about gold as a reserve currency. We don't transact in gold, but it is a reserve for a lot of different applications. What is kind of the breakdown there? And how does the industry or the Bitcoin kind of space see the transaction speed improving? Is that going to be a limiting factor? And then any thoughts on the energy side of that? Because I think that's really quite important as well.
Why do you think it's mutually exclusive? Why do you think those two things can't happen?
Well, I think primarily the transaction speed at the moment is the limiting factor. If you're saying a transaction, it'll be the primary transaction method. The current speed, several minutes for getting that done, doesn't really compare to other cryptocurrencies, for example, that are made for transactions.
And you can have other layers, right? And we have Lightning and Liquid, right? You've got other layers on top of Bitcoin. Bitcoin is still the reserve. It's still what people have locked up as collateral, guaranteeing the asset. It's not the dollar where they'll just print infinitely. You never know how many there are, right? There is collateral locked up below those other layers. So I think that it absolutely can be both. I think that the block space on the Bitcoin blockchain gets increasingly more expensive, right? Right now it's practically free. I sent a $20,000 wire the other day, and I think it was like 1 penny. That's crazy. Like, if you're JP Morgan, no wonder you hate Bitcoin. Think of all the transaction fees they're going to give up. Yeah, totally. If you can't tell, like, I really am not a fan of all of the criminals that work in the banks and have perpetrated these lies. If I haven't made that crystal clear.
No, your point's a great one, though, Alex, that there is this dichotomy. And what I think, and there's a great guy I'll love to plug on this topic every time. His name's Bob Burnett, Barefoot Mining. Old Man Yells is his podcast, but he's probably the leading thought leader on the topic. And as it evolves, the transactions will happen on other systems just because of the limited capacity of the Bitcoin network. But it'll still be based in Bitcoin. I mean, Tether's using Bitcoin now. It will be the underpinning. I mean, just back to your gold analogy, back in the good old days, we couldn't sling gold around, so we had banknotes that were backed by gold, right? And then we threw that all into trash. So it'll be a little bit of both, but the daily buying your cup of coffee is going to happen on something other than the base layer.
Yeah, but not some other crypto.
Not some other crypto, unless it's one of these that's creating a system that's going to ultimately run on Bitcoin anyway. That's hysterical, but.
What do you guys think about the Michael Saylor MicroStrategies business model?
It's interesting. It's kind of as simple as someone's willing to lend me a depreciating asset at pretty competitive rates to go buy an appreciating asset. You kind of do that all day long. So, and that's why you've seen the knockoffs. And not that they're knockoffs, he's encouraged other companies to adopt that. So to some degree, I think you'll see lots of companies adopting, at a minimum, a simple Bitcoin treasury strategy, but maybe they get a little bit more exotic towards the lines of Saylor. And one of the fun things, which when you're looking at raising money to go do something, especially if it's Bitcoin related, go use the capital you raised to buy Bitcoin to start, and then borrow against that to go do whatever it was your business plan is. I think you're going to see an increasing amount of that applied as a it just kind of makes sense. If you've got access to this highly appreciating asset and you have a time preference that lets you weather the volatility, that's a big part of it. The traditional public companies that are quarter to quarter may not have the stomach for a lot of that now, but they will over time, especially as volatility squeezes out of the Bitcoin. So you're going to see a lot of imitators.
Yeah. It's kind of an interesting one. I think there's lots of questions that I have about it with, I guess what's your entrance price? And, if Bitcoin does not rally as kind of the argument requires, then, what's your risk for, a margin call or other? But I think, whether you want to touch on that, go ahead. But, the other side, I'm curious to hear y'all's thoughts on is how the current administration has changed the kind of forecast for crypto in general, Bitcoin specifically, maybe how that relates to the previous administration. Is it better, worse?
I mean, the previous administration was going to turn us into China.
Meaning?
Right. We need an administration that puts technology and innovation and growth before all else, right? Safety, obviously, but we can't live in a place where they continually bash energy companies, right? They let all of this climate narrative go crazy, created universities now where the climate discussion is just completely unhinged. I'm so grateful that I don't have a child in a university any longer where, she literally was verbally attacked for working in Bitcoin by some nut job climate person on her campus. This administration is pro-America. It's pro, let's do things that secure our borders. Let's do things that allow for innovation to happen here. And it takes energy to do that. Let's be collaborative and creative with our use of our natural resources and with our relationships with other countries.
Mm-hmm. And that's Bitcoin is, back to the earlier comment, it seeks out the most disadvantaged energy. To the extent you can utilize that productively, that improves efficiency. Right? So it's a great productivity gain across the board, which people who just look at that great skull of Satoshi sculpture, like black clouds billowing out of Bitcoin plants, it's nothing could be further from the truth. So that the market's really, I think, finally coming around to realizing that. To the administration's role in encouraging that, I think they're kind of halfway there. They got bogged down in the same thing that everyone does when you first look at this. You confuse, crypto's all blockchain, so all blockchains are equal. Some are better than others. And they're finally, I think, beginning to realize that Bitcoin is different. It is a blockchain, but it's completely different from all the others. So there's been a noticeable shift towards conversation towards Bitcoin versus crypto generically in the administration. The one thing I think they've gotten wrong is the SEC tapping the brakes on crypto regulation. Because a lot of these, if you can issue more of it, if you've got a committee of 8 or 2 that can just overnight decide to issue more coins, it's a security, in my opinion. And they've backed off of that, I think, ill-advisedly. Things tend to correct themselves over time, so that probably changes back in the other direction. But that's one area where I disagree with their efforts so far. But in general, Bitcoin's freedom and liberty, and this administration's much more aligned with it than the last one.
Yeah.
One funny anecdote, the property right aspect of Bitcoin is something that is lost on a lot of people. When you get your property tax bill around this time of year, most places, that's an annual reminder that you don't really own your house.
Right.
It may be paid off, but you don't own it, because if they can tax it, they can take it. And especially with property owners in the West, that's a concept that resonates. They all get that. And we just learned last week or 2 ago when we were with some smart guys from New York and Houston, when they launched the ETFs, the biggest uptake amongst investors was not on the East or West Coast. It was in the heartland. So the people buying the first wave of Bitcoin ETFs were the farmers and Midwesterners who get it on property rights.
Mm-hmm. Yeah, that's interesting.
And just
go
on
ahead,
that note, yeah, you had said something earlier about, like, I don't know, I can't remember what your question was exactly, but, curiosity or adoption of the energy teams. I mean, we hosted an event 2 weeks ago for Adam Back, who many people consider to be, patient zero, right? He was on the original Cypherpunk mailing list, was communicating with Satoshi. Some people think he is Satoshi, but his team called and said, we're going to be in Texas and we'd like to come to Houston. Is there anybody that in your network that you think would be interested in, just a Q&A and meeting Adam, et cetera? And I said, sure. And I promptly fired off, a whole bunch of invites thinking we'd get a crowd of 20 or 30 people. We had 70 people come to a private event with Adam Back, and everybody was in a suit and tie. They were all energy executives or very high net worth individuals. Like, it's here. It's happening. Just, thanks to your podcast for bringing on real conversations and really continuing to put information out there, because it's hard to find where to go to look for truth, right? It's like once you see Bitcoin, you understand that at the premise, it's just truth. It's truth in money. It's truth in language. Nobody can occupy its mindset and take it over. It's not Ethereum where you've got 8 guys dancing around in clown costumes, pretending to be something like Bitcoin, which they never will be. It's here. And it really, as simply as we've stated it, or maybe it's complicated, but I mean, it really, for the energy teams, should just be something that they integrate into their business model. It doesn't need to be a huge deal. It doesn't need to be a huge press release. It doesn't need to be a huge whatever, but it makes economic sense, especially if you're an asset owner, for you to be able to optimize a power plant, a processing plant, a well pad, etc., by using Bitcoin mining.
Yeah. Well, I think, the concept of using the energy molecule in the most effective way at the most effective time, I think that is abstractable to other areas, especially as we talked about with the AI side and, other emerging sources of load. I think that's a really interesting one. I think that they'll give a lot of people stuff to think about. Do you guys have anything that you guys want to pub or point people to if they're interested in checking out more of what the work that you're doing?
I would just second what Dan says. Like, look up Bob Burnett at Barefoot Mining. He's done a lot of great podcasts. He's bought kind of distressed assets and turned them into Bitcoin mining operations. You can try to reach out to Dan. He's on the phone all the time. He may have to call you back. But I always say, hit me up on LinkedIn if I can be helpful. I'm willing and delighted to set up a 15-minute call with anybody that is trying to figure out Bitcoin mining or Bitcoin in general or wants to work in Bitcoin. So if I can be helpful, always happy to do so.
Awesome. Well, thank you guys so much for coming on. It's fun chatting with you, and I'm excited to keep an eye on some of the stuff that you're putting out as well. So with that, we'll put some stuff in the show notes for anybody interested, and look forward to chatting sometime again.
Thanks, Alex.
Thanks, guys.
Thanks for joining us at the Energy Desk. Again, this is a limited series, so if you want to hear more episodes, you'll have to let us know by hitting follow wherever you get your podcasts, or by sending me a message at amelvin@mobiusriskgroup.com. See you soon. And please keep in mind, this commentary contains our views and opinions and is based on information from sources we believe are reliable. This commentary is for informational purposes, should not be considered investment advice, and is not intended as an offer or solicitation with respect to the purchase and sale of commodity interests, or to serve as the basis for one to decide to execute derivatives or other transactions. This commentary is not considered promotional material.